more open philosophically to doing quantitative easing than you were certainly when you're doing quantitative tightening to the tune of tens of billions of dollars per month. So it looks like they're focusing more on the employment situation, less on the inflation situation.
We got a cut from the Federal Reserve. We got strong economy, GDP, and unemployment guide in the summary of economic projections. And we got a really dovish Jerome Powell suggesting that jobs could be plummeting to the tune of 20,000 jobs per month because he thinks the Bureau of Labor Statistics is overstating the jobs report by 60,000 jobs per month, which is the reason that they gave for cutting 25 basis points. He says that the Fed voted on a vote of 3-9. So 3 did not vote for this 25 cut and 9 did. We got Goolsbee and Schmid going for 0 and Myron wanting 50. So he wanted a bigger cut, which is also what Hassett said earlier, that we should be pushing for a 50 cut. But I want to get to the most interesting stuff first, which is that Powell told us that this jobs market is the big concern, and they will not let policy stand in the way of the jobs market stabilizing. They say that the jobs market weakened more than they expected, which contributed to this cut. And while they think that tariff effects are basically going to expire in Q1, in other words, peak out, so as long as we don't get any new tariff announcements, we're going to peak out on inflation in the first quarter, and then it's down on inflation from there, and we should be able to support the jobs market. Now, he says we're at neutral now, which is a little bit hawkish, right? Because it's like, wait, so no more cuts? But he's also basically telling you, hey, look, no more cuts. But if the job market actually keeps weakening like this, we're going to keep cutting and printing, basically. So we've got to break this down. He makes it clear towards the end of his press conference that the labor market has significant downside risk. And it's almost like he read the Howard Marks piece that we were reviewing this morning in the live stream, where he says that if the job market turns down, this is going to be a very unique downturn because it means that AI, the very thing that induces the downturn, might also prevent the recovery. Because usually when you have innovation like cars or radio, or you have a recession, you create more jobs after the innovation or the downturn. But this innovation-led potential downturn could actually eat the very jobs that would cause and keep you in a depressionary state. And so he's basically telling the market, hey, listen, guys, right now we think we're good, but we are ready to run this freaking money printer. We are so freaking ready. And this is broadly bullish. I think this is why markets are like, yes, we're going up. We broke right through 627. This morning in the Alpha report, we gave it a 78% chance of a bullish outcome today. We were moderately bullish to very bullish. A dovish Powell, in fairness, was not on the bingo board. It was a possibility, but it literally wasn't on the bingo board. This is our bingo board. And if you look at the different segments that we didn't nail here, we didn't actually get talk about a stable jobs market because we actually got talk that the labor market has not stabilized and that they are trying to stabilize it and that it's actually growing negative. See, that's why I put a big orange check X right here, because I wrote that Powell would tell us something like labor market break-evens around 0 to 20K. Data suggests we're at break-even. That's not what he said. He actually said we're likely below break-evens right now, which is bullish. But we did get a hawkish summary of economic projections. So this is kind of like a weird thing to reconcile, right? But if you look at the summary of economic projections, we got GDP growth that moved from a projection of 1.8% in September right here to 2.3. Now, Powell says some of that is because of the government shutdown. This should have been like 1.9 and 2.1, he says. But basically, really writing up GDP. That's technically bullish soft landing, hawkish rate cuts, right? I guess 2% on that, mind you. They kept unemployment at stable to down, which is hawkish, and the base case scenario is soft landing, no recession. In fact, if you go over here to the range, you can actually see they basically removed the negative potential for GDP. You can see that the person who in September was betting that GDP would be as low as 1.5% actually revised up to 2%, which is actually really remarkable because it means that the consensus at everyone who put together, all 19 members, not the voting 12, all 19 members of the Fed who put together this SEP, they're like, look, our base case is bullish, man. This economy, bullish. We're ready to cut and print if we need to for job cuts, but we are potentially pausing right now. Jerome Powell's first question, mind you, was, hey, are you basically saying pause? And Powell's response is, yes. And then, of course, we'll be data dependent. Now, of course, we're getting data next week, which Jerome Powell was also asked about. But that's where things got weird, because Jerome Powell basically looked at the data and said, don't think about it the way you're thinking about this. And this is weird, because I'm like, before this meeting, I wrote the following down. I wrote down this. See, I wrote down that we've got a jobs report coming out December 16th. We've got it where we're expecting 50,000 jobs, which according to the Fed would be negative 10,000. Okay, because they're taking 60 off of those. Then you've got CPI on the 18th. Then you've got jobs on the 9th again. And then you've got CPI again on the 13th. That's January, right? Now, what's crazy, what Fed did is he literally put an asterisk on this. Jerome Powell said that the reports that we get in December for November, we're going to have to, quote, look at very closely because the way they collect the data during a government shutdown isn't good. In other words, you can't trust that data that you're getting. So Powell basically said, look, we're on hold. We can't trust the data that we're getting for November because of the government shutdown and the collection actions that failed because of the government shutdown the first 2 weeks of November and, first 12 days of November and obviously all of October, longest shutdown in history. And so he's kind of saying, like, we're just going to ignore that. We're going to go to January and we'll see what we get with the data releases that come in January. Now, the next meeting is on my birthday, January 28th. Right now, markets are expecting about a 25% chance of a cut, which is the same spot where we were before all of this release. Now, again, how is that possible? Because we got this hawkish summary of economic projections. It was hawkish. The market's like, damn, we're on pause and we're hawking on the summary of economic projections. Odds of a rate cut in January, I was watching them, dropped to like 12%. And as soon as Powell said, don't trust the data that's coming out, we are ready to print if we need to, and the jobs market is moving below break even right now, and this is going to be really bad if we go into a downturn. As soon as he said that, saying we've got the tools to support the labor market, we're not going to stand in the way of the labor market. As soon as he said that, the odds of a rate cut for January 28th went right back up to 25%. Watched it happen live. It was remarkable. So we did get bingo, but we actually got bingo on things that are good for inflation, right? No evidence of concerning level of wage inflation. He referenced the ECI. Literally what we wrote down is what he did. Inflation outside of tariffs coming down as expected. He said that. We will see one-time overtime price increases due to tariffs. He said that. No evidence inflation has spread to other services or becoming self-fulfilling. He said that. Inflation expectations are anchored. He said that, right? Like all of those things that we anticipated in that column, which are good for the economy. Inflation coming down, great. But he gave us even more. Not only did he give us the beautiful, delicious Santa Reinvests coupon code for the alpha membership at meetkevin.com, where we made our plan this morning and released it every morning when the market's open, but also our AI at househack.com, or reinvest.co, it's the same company. He also gave us this blessing that said, listen, if we need to cut, we're ready to. And inflation's going to peak in January. Or, well, I mean, he said Q1 in fairness. He thinks that inflation will peak in Q1 and that we'll be sort of on a downtrend from there, in part because of the housing sector, because housing rental inflation has basically zeroed out. Now, he did also talk about housing. And he was asked, hey, like, you're lowering rates. It's going to be good for housing, right? And he's like, no. The problem with housing is we don't have enough housing, and that keeps housing prices elevated, is essentially what he's saying. He says the problem is it's not something the Fed can control. You need to build more housing to actually get prices to come down. This is one of the reasons I love investing in housing in areas where they don't build houses. That's why here's a property we literally, during the Fed presser, I got an email. We just closed on this. Look at this. Nasty, hoarder, gross, moldy, disgusting disaster. Nobody wants to live in this. Nobody should live in this. No human deserves to live in this filth. That's why we buy it, we fix it up, And we gain value by doing that, right? We provide a good or a service, a quality rental that somebody can rent from, and we make this beautiful. That's our job. That's the basis of my real estate startup, right? The real estate AI that we're doing is a huge bonus that obviously could be a massive game changer. It is why I want a soft landing. Like, just to be fully transparent, I would love nothing more than a soft landing, because if we can soft land, it means we can IPO sooner. But Jerome Powell is like, listen, the labor market is doing way worse. And this is the first time I've actually seen Jerome Powell go, not only is the labor market doing worse than we anticipate and expect, with potentially being at negative 20,000, but we need to do everything to avoid a sharper downturn from employment happening. That's why we're at neutral rates, and if we need to move lower, we will. But for now, we're on pause. That's the easiest way to reconcile this. So let me make sure I got everything covered here, because there's a lot. Tomo. We need to talk about Tomo. Okay. A lot of people are going to be really confused by Tomo. Donald Trump, by the way, right now saying the Fed rate cut should have been double. We know. That's what Hassett said this morning. Hassett is basically Donald Trump's shill. So it's not a surprise that Trump is saying it should have been double. And this morning, Kevin Hassett is like, a 3% GDP is a low ball. We have an AI boom going on with 18 trillion in new factories. And the Fed will need more cuts. We actually support a 50 basis point cut, although a small 25 basis point cut is in the right direction. That's what Hassett said this morning. Not a surprise that Trump is reiterating it, because Trump probably said it to Hassett. Hassett went on Fox News and yapped it. Okay, that's how the game is played. Okay, learn the rules of the game and play the game. Eco 101, basically. Okay, now, regarding Tomo, a lot of people are going to get confused by what Tomo really even is. And that's okay. I'm going to explain Tomo very clearly. So Tomo is basically overnight lending. Think about it like injecting money into the economy, but then taking it right back out the next day. It's very short-term liquidity used to manipulate the overnight funding rate. That's it. It is not quantitative easing, because the money doesn't actually ease into the market. Okay, a lot of people, these people, there are some people that I won't name by name, but that I really don't have a lot of respect for, because they never look at things in a nuanced manner. They can only see things that are beneficial to their own. I'm not going to get into it. Anyway, but basically I heard somebody go, ending QT is basically the same as QE. It's like, no, it's not. Quantitative easing is the expansion of the money supply in a permanent manner by permanently running the money printer to generate reserves that show up at bank balance sheets and at institutions that can then be lent out into the economy. That is long-term 5, 10, 20, 30-year treasury bond funding. Stays in the economy for a while. That's what we got after COVID. Tomo, or the temporary open market operations, is just a fancy way of saying, listen, we're ending QT, and as a result of that, we're going to be buying some short-term treasury bills, like 1-monthers or 6-monthers or whatever, just to keep liquidity moving. But it is also bullish. So both QE is bullish, ending QT is bullish, and Tomo is bullish. Why is it bullish? Not because you're expanding the money supply, but because you are reducing a risk of a private credit shock. So yes, bottom line, all three of those things are bullish, right? Ending QT, QE, which we're not getting right now, obviously also bullish, and Tomo, all bullish. Why? Again, reducing shock risk, which is important, because the 10-2 treasury yield right now is jumping to 61 bips. I honestly think that is because the job market, or the bond market, is going, oh crap. The Federal Reserve might have to cut rates even more in the short term to prop up the labor market, because Jerome Powell is literally telling you, don't trust the data, and, while we're on pause now, we're ready to print. Okay, that's Tomo. What else? So far, we've got disinflation continuing. We've got Tomo up to $40 billion in December and may remain elevated. That was more bullish than we anticipated. That was more printing overnight, which gets vacuumed up again, than we anticipated, which is good. We also heard that the consumer keeps spending, but that's mostly in the upper income level. That's fine. My ski slope cup right here. Going skiing next week. Everyone agrees the labor market has softened. The question is, what's the biggest risk? We have to be careful in the assessment of the household data. The data may be distorted. Data was not correctly collected in October, November. And in my opinion, this is basically very messy. He's saying don't trust the data. And then he says we need to be very skeptical of this data coming out in the next data set. Great. You did see 3 people at the Fed committee project rates at 3.9, which suggests a rate hike. Jerome Powell says a rate hike is not the base case scenario at all right now. Unfortunately, there's no evidence of a sharper downturn in employment with rates at neutral, but we have very real risks to pay attention to. Job creation is negative. And he says we need to watch the situation very carefully. We do not want to push down on job creation. We do not want to push this labor market down. That's huge. Then he got into a little bit of like how great AI could be from a personal productivity point of view, but obviously remains to be seen what it's going to do for the economy, right? For actual like labor market. And so this is where this is broadly a bullish reaction, I think, is appropriate here, because what bottom line, if I've had to put this all into one line, I would say the Federal Reserve says the economy is soft landing, and if there's any hiccup that says the jobs market's going to roll over, they are ready to run that money printer. Like, they've got a jet engine attached to the money printer, and they're like, just say the word, baby, just say the word, because we will run that printer. We will run that printer faster than a Mach 2 jet engine from Boom. If you saw that news, the turbines for AI now, it's crazy. And I get it. It's great. There are cool things. And we're just really getting into the AI productivity phase. I hate always bringing this up because I feel like people think, I'm shilling this. It's not a solicitation. I should put the not a solicitation banner up, read the disclosures. But I think the next phase of AI is the actual productivity stuff, where when we release this feature, you're going to be able to take a picture of a home or your bathroom or your kitchen or your house or whatever, and we'll tell you if you spend X dollars, your net worth could move by Y. Like, that formula function for doing investments and for doing renovations is a game changer for real estate AI. It's a game changer for construction. It actually says if you spend money on XYZ, it could make you money. Like, in my opinion, the AI would come and say, hey, we're going to put together an estimate of how much it costs to renovate this for you, all automatically with our renovation AI. And then we're going to look at what this property is selling for versus what we actually think it's worth, fixed up as a beautiful property, a property that's not disgusting and a hoarder mess. And I mean, look at this. This is terrible, right? And what does the AI say that our net worth is going to increase by remodeling these bathrooms or this kitchen? Well, we believe the answer is going to be a lot, to the tune of, $100,000 to $120,000 or more. I mean, who wants to use this kitchen or this bathroom, right? This is disgusting. Look at this. Look at the rust over here. But do you know how much that medicine cabinet costs us? $30, right? This is what we're trying to teach with our real estate artificial intelligence. Look how nasty that is. This is why you don't have enough supply, because in Democrat-run states where this house, for example, is, they don't build new homes. So you rely on people with the balls to go deal with, stocky botrytis or whatever the hell this black mildew is. We don't like to use the other M word. And provide housing for people, right? It's a lot to do. But anyway, that's my bias, is that we are going to go into some form of productive form of AI phase. But, if labor falls off a cliff, we got problems. But the good news is Powell's here to tell us it's all going to be okay. We're going to print. Now, is this time really going to be different? Is it all going to be okay? Well, I guess we'll find out. All I know is if you want to see the stocks I'm buying, check out the Alpha Report. Get it every single morning before the market is open. Use that coupon code SANTA-REINVEST at meetkevin.com or join our Reinvest AI at reinvest.co. And folks, we'll see you in the next one. So with that, thank you, Jerome Powell, for going bullish today. It's exactly what we wanted to hear, and cheers to everyone. I hope you make lots of money out there, and I wish everyone the best. I'm gonna make more coffee now. See ya!
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.